Okay, Nikhil Ranka of Nuvama Asset Management with us on the show as well. Nikhil, great having you. Thanks for joining in. Just trying to understand, Nikhil, what is happening at your desks? Because it seems that while some of the buying has happened, the markets have not given too much of heat to the large DI buying because the quantum of selling, both from the FIs and from the HNI community, seems to be very strong, very large and very strong. Are you guys buyers in the market currently? Do you advise that, or would you wait on the sidelines for the time being?
So, good afternoon, Neeraj. So we have been positive on the markets, and clearly look at valuations. We are now at close to 17 times FY28 earnings. And historically, this has been a reversal point in terms of valuations. So, every 2 years, you will keep having this sort of scenarios where, for some reason or the other, markets keep tanking 10-12%. So if you see 2016, it was Brexit, 2018 was Ireland FS crisis, 2020 was COVID, 22 Russia-Ukraine war, then you had Trump tariffs. So this is par for the course that you will keep having these corrections once in every 1.5 to 2 years. But then over the next 18 to 24 months, typically markets have gone and made new highs. I don't think this time around will be any different, because now we have had time correction for indices for the last 18-19 months. And we still have seen earnings growing by 15% in that time frame. And as we head into FY27, the estimate for earnings growth is now back to double digit, 13-14% in FY27, close to 11-12% in FY28. So I think from a 9 to 12 month perspective, the current levels represent very good entry point for the Nifty.
Nikhil, you're one of the rare voices we've spoken to today who is positive on the Indian markets. Is it just purely a valuation-driven play? Is the ferocity of the fall not something that is spooking you? We're back below the 23,200 mark even as we're speaking.
Yeah, so Tamanna, obviously there is some amount of discomfort to investors given the way crude prices have behaved. And typically, over the weekend, last 2-3 weeks, we've seen something or the else happening. So people do not want to, take positions into the weekends and go because if something happens over the next 2 days, then again you can have a gap down. But my sense is, to a large extent, things are now stabilizing. Crude prices after the initial surge, in spite of everybody now factoring that the strait will remain closed for at least the next 20-25 days, crude relatively to that extent has been well behaved. So my sense is, the moment street gets to sort of think that this is not going to exacerbate further, I think the up move can also be very fast. And if you look at the derivatives positioning, the FII short position in index is now back close to 36,000-37,000 crores. Historically, whenever they have touched a level of close to 40,000 crores on index futures, in terms of shorting, we've seen a very fierce pullback in the markets coming from those levels. So my sense is 1 or 2 days more, and then probably the market should find its feet.
Okay. So then that's a calming voice actually right now. Nikhil, thank you so much for speaking with us. Nikhil Ranka there, Nuvama, coming in with a view saying that maybe what you're seeing in terms of panic selling right now is also